So it's really decision time for Tesla here. Hey everyone, in today's video we're going to go through 10 stocks to watch for next week. There's a couple shorts in here that make a lot of sense. Some longs that are in different industries than we usually look at. Stay to the end because I have two indicators that I want to show you how to use properly that could probably save you a lot of heartache in regards to if we're overbought or oversold. Things you haven't really used that are linked basically directly to the indexes. So let's jump right into it. As always, subscribe to the channel, click all notifications. I am posting private charts in this community again that are not being posted anywhere else. You only see them if you are subscribed to it. Hey everyone, if you could just take a minute please and like this video. I purposely don't run ads to waste your time, but liking the video helps me greatly with the algorithm and I sure would appreciate it. So see this little move right here? We talked about this one a couple weeks ago and we're going to spend a little bit of time on this because I really want you to get this. So we had that little wedge line right here and we said, okay, if we clone this, which we did, and then we just slide this one down just a little bit. Let me just click on that, slide that down just a little bit. You can kind of see how it fits right in there, right? So you kind of have this little pattern right here and you have this flag and then we break the flag down, okay? Once we broke down, we never even rallied up to this level. What was more troubling for me is that we never really got up to this level. We never even tested 208. So that's always a bad sign for me. Now, you never tested 208 and you're sitting right here. So it doesn't take a rocket scientist to see this and see that this is an H. Okay, so here's your H. Here's the heart of the H, right? You can see that. And then from this point down, okay, is roughly 23 points. It's not the same percentage down, but what you do to get an idea of it is you just measure the top to here and you're going to get like a number. That number is going to be 11%. So then all we do is just come down to the neckline, which would be right here, and that would get us 11%. So we'd pull this back just a little bit so we can be exact, right? Or as close to exact as possible to get an estimate. So that puts you right around 155, 160. That's where we could head to if this breaks. Now, there is something else going on with this that warrants our attention. So here we are on the weekly. Now, obviously, everybody can see this, but let's put it in anyway, right? So we already know that we have a downward trend line that we can't even rally to anymore, right? So whenever you can't rally to an X trend line, you need to be a little concerned. And we can see that break right here in real time on a weekly basis, a little cleaner than you can see it on the daily. But you couldn't rally, but this break looks bad, right? Well, there's another break here if you really look at this chart. So let's go all the way across and realize that 1, 2, 3, 4, right? Kept touching, could not break, okay? Left shoulder, head, wonky right shoulder, okay? You have a huge head and shoulder here on the weekly, enormous. If this breaks, you have issues. So the next spot based upon this, on this break, you're basically going to test the low of the pivot, okay? And that takes you to 134. So this has real structural issues. And it does denote, is this why he's acting so erratic on Twitter? Is it because he knows that he wants to sell more stock in order to raise money, and he's going to say, I need to do this to keep Twitter alive for free speech? And there's usually a methodology to his madness. So keep this on your radar. I will tell you straight up, I am short, and I have been short all week. It just did not go my way. I started long, and it just didn't work. And then as soon as we broke this level, you can see this. I'll draw it in for you. But once we broke, let's clean all this up so you can see it even clearer. But once we broke this level right here, that was it. It was game on, right? Once you broke that, that was it. I mean, there's no reason to stay in the trade anymore. You can see you have a flag, you have this pendant, you break the pendant, you're going down, and you're forming a much larger structural issue. And that's what I would focus on. Now, when we go through corrections like we just went through, you will see some names pop up that are old that will stay leaders, and you will have some new names that will become leaders. We're going to go through a couple names that may be new leaders and some short ideas, but I just want to throw this out there. So it's not something that I'm doing cartwheels about, but it definitely should be on your radar. So when you start seeing things like this, let me just blow this up, and I'm going to just give you another quick tip. Come out to January and just stop all your charts. So in other words, stop looking at where we were in 2021, because I'm just going to tell you and save you a lot of time. You're probably never going to see those numbers again on some of these names. But can you see where you were 9 months ago? And the answer is yes. Well, if this went back to where it was 9 months ago, people would be doing cartwheels. But look at this. So it's absolutely perfect, because here is your undercut, right, for a double top. now, or a double bottom. Now, and you don't get it until you're up here, right? But there are signs to see a little earlier if we have a shot at it or not. Now, what you're going to see here is that if we zoom in on this section, you might have a shot at this if you can clear all over this. And what I really like about this particular chart, I really don't even need the candlesticks. You can look at this on, we just used good old bar chart. Don't even need colors. But if you look at this, you have the undercut, right? And then you're flipping. Look at that bar. Look where you closed. Look where the open was, right? All this was price rejection. Now you flipped and look at that close. So now I'm in a position where I could retest this. And if I retest that and I get through, that's even a more powerful break than the first time. Second time you push through, right? Second time you push through, it's a more powerful break and it's a higher degree of probability. So that's why people like this and they like playing the retest and the bounce, because the second time through is usually more powerful. Okay, it's rare that this is not going to go. So it's a smaller one, and we're looking for this kind of turnaround situation. But I am seeing signs of it. You are above the 5-day. You do have some work to do. You are above the 55, and here's your 200. So you have a long way to go. But this is starting, and it's something that I would put on your radar. Just watch. Some of these names are going to come back. Some of these software names that come back, it might take 6 months, while, but there could be a trade in here next week or the week after we get through this. You have a short week next week. Just keep that in mind. I do like that name. Now, Coin is one that we shorted. And I just want to go through this. I am still short the name. And to me, the situation's getting worse. It's not getting any better. If you watched last week's video, it's why I really hammer home to, even if you put me on double speed and write down the symbols and what I'm saying, it might make sense. So once we popped over and we were here, that was it. To me, this was such a simple short, because it was rallying on them making the media rounds. Right? That's why we were popping. Everything's fine, nothing to worry about. And then they start telling the truth this week. Well, we're not sure of the fallout. We're not really sure how this is all going to play out. So you have some real issues going on there with the brokerage sector. You have more issues going on with the brokerage sector, it seems like, than Bitcoin itself, which is very interesting. So now you have this H. But you look at this close. When was the last time you closed down here? Okay, so let's just keep going through it so you understand what I'm saying. Like, you haven't. Right? So hopefully you can see that, but let's blow this up. So this is all the data that we have. This is the close. Okay. We've never closed this low before. Okay. So you have an all-time low close, no matter how you slice it. Even though you were down here before, right? You've never closed down this low. So that tells you pretty much all you need to know. So I would watch this. If this H breaks, for me, I think you're heading right to that 40.83 level. I'd like nothing more than a bounce, but don't rule this out as it's done. The trade's over. There's a lot left on this. This is still a very large H that has a huge move down. We were up 23% in the short from Friday. And if you break from that level down, which is 23%, just to put it in perspective, because you measure, it's a measured move, you're roughly $33. If you think that can't happen, you're wrong. I mean, it can absolutely happen. And I don't even need a systemic problem with the company. Just the fact that people are going to pull assets out of there and they're going to put it in their own storage facility, that's all you need, because it's assets under management that drive their revenues. So either way, they're going to have a problem. So that's definitely something that we should be paying attention to. Now, Apple's one that we've been playing with for some time. If you get the free newsletter, and there is a version to follow along in description below. See this trend line? So this is DTL, it's called, downward trend line. And you can see pretty clearly how defined that is just off these peaks, right? So I think that most people don't realize how obvious some of this stuff is sometimes. And sometimes it's the simplest patterns. And I was explaining this in the trading community. See how you undercut here and then you just went? You've had nothing but a big trading range. So no matter how you look at it, you've had nothing but a big trading range, and you've never broke below the lows. Now, I'm not saying you're not going to, but there's some signs that are telling me that we're not going to. And what I want to say is, I see how we're setting up here to break, and we didn't break. But if you keep knocking on a door long enough, what happens? That door opens up. So we want to pay attention to that. And to me, I see a big W. So I see a W here that could absolutely set up and push. So that's really what I want to see. Right? And I do think we could see this, but let's see what happens. The dollar's been weak. That's exactly what we want to see, and we will go from there. Now, First Solar's one that we bought today. I like it. I started a position in it, like a real position today. People are going to look at this and go, oh, it's moved so much. Yeah, it has. But what happens when the market actually starts lifting? So in other words, this started lifting, and for the past 3 days, you've had nothing but these green bars, right? Even on the fourth day when you broke out, what happened, right? You closed at the high and low. The only reason that bar is red is because it didn't flip the open. Look at this. So I almost have 5 days of buying there. Now, if you overlay that, okay, and you can kind of see where you're at with the 22-day, but let's put in the volume just so you can see this. So volume's kind of drying up a little bit after coming in, right, after that big rally. But there's a couple key things to look at here to get a better context of this. Let's take a look at this on the weekly so you can see this. So, yep, this week's not ideal, but look at the volume. Look how the volume's been upticking. So I'll take 1 week going into a short week. That's not really going to bother me too much. But look at this so you can say this. Look where you just got over. So we're making an 11, 12-year high. So you've got to be kidding. So to not take a shot on this, to me, it's silly. It's like, why are you trading if you can't take a shot on something like this? So when you start breaking levels like this and your volume is above where we're at, you haven't had this kind of volume on this name, right, in years. I mean, almost just right after the pandemic. So it's definitely something we want to pay attention to. It's one of the top 10 sectors in MarketSmith when they do their subsectors. And I like this a lot, and I would really pay attention to this. I would not rule this out because of the move. I do understand where we are in regards to the RSI. I do understand that you're up. I don't care that you're up. The ones that are the most dangerous are the ones that when you come down and then you take out those highs. When you start doing that, they're the most dangerous. So I would continue to focus on this name. I would not rule this out. At the end of the day, you could see very clearly when the market on close orders came in, what names were they buying? And you can just see the accumulation, right? From 230 on, which is when institutions really start buying stocks. What happened? Green bar, green bar, green bar, green bar, right? So, and then you start looking at some of the others. How did they act around the same time? Not the same. So when you start looking through them, you can start finding, deciding factors on which ones make the most sense for you to play with. And that's definitely on the list. So SI, I want to talk about this. See the selling that's going on here and how much selling you're seeing? Right now, this company is trading at roughly 0.5 of book value, meaning they're trading 50% of assets. So there's something seriously wrong here. And you can see this level. Let me just show you this. Pretty clean. Okay, so that was book value roughly, okay? And now you're trading right around half of book value. So rumor is that they have loans outstanding with crypto brokerages and they're trying to quantify it all right now. I'm just telling you, with the amount of selling that you're seeing going on here, something seriously is wrong here. So if you see a rally, this is how I would play it. I'd be real careful here. But if you see a rally and then roll, put this on your list as you put coin on your list, as we did Hood last week, because this is far from over. And the real meltdown is coming in the space of the brokerages and all these cross-collateralized loans, and Silvergate appears that they're in the middle of it. So don't rule this out just because you're here and you're looking at book value and it's 50 cents on the dollar. Now, Taiwan Semi got some really good news. Got two very good pieces of news. One piece of news was Warren Buffett is now a major shareholder, top 10 position. And you can kind of see that people, maybe this was getting leaked, maybe it wasn't. But either way, he was doing it all last quarter. And we figured out if he averaged his cost, he's probably right around here where it opened up. But you could see that he just continued to buy. Somebody certainly did, right? And he just kept riding up. But look at this little island you have up here. You broke down. Apple comes out and says, by the way, we're going to start doing chips out of Arizona. Guess who has a plant or is going to build a plant in Arizona? Taiwan Semi. So this is setting up. So this is a real simple trade. Very simple. How many semiconductor stocks are trading near these highs? Okay, you have this one that's trading near its high, and then you go and take a look at this on the weekly. And here we are again. We're over our 22-week moving average. Look at the volume that came in. Staggering. When was the last time you had volume like this on that chart, on that stock? You haven't. So I equate that to Buffett, and then I equate Buffett actually buying to the fact that he probably knew, shocker, that Apple was basically going to take over the capacity utilization of the new plant, which just ramps up their capacity and everything else a lot faster, gets them up to speed a lot faster. And you're also seeing this, and I think this is going to be the trend. I think semiconductor trend is going to be going into these foundries, and these foundries that are going to be created in each other's nation state. So in other words, we're going to have plants in the US, they might have some in the UK, but we're going to see this. We're going to start seeing corporations get away from reliance on one particular vendor. And I think that that is what we're going to see with Taiwan Semi as well. So watch this one as well. This is where the action is. These names are all trading near the highs, all of them. Now you look at something like a NVDA, okay, that is not trading near the highs. So when you start going through that space and you really start digging into it, okay, what you're seeing is the foundries are pulling away. And I'll give you one more that you should be on your focus list, okay? Semiconductor chips cannot really be around without ASML. So I like this and I like how it's trading, but gun to my head, if I had to pick 10 stocks, that's not in there, okay? This is in there. I don't know what that is, but this is in there. And this is what I would look at. Okay, I would look at this in Taiwan Semi. Now, the other space that's becoming increasingly clear to me that it looks like it's going to work is going to be this solar space. It seems to be the area that we're paying the most attention to. So why is that important? It's important because I think that this is going to be the new leading space. And you're not really leading right now, right? So if you take a look at MarketSmith, I think you're in the top 10. Oil royalty trusts are still the leader. But if you just take a quick look at this and you go, all right, well, here's my bottom, and then I undercut. So here's my double bottom. Then I flip, I form a little island comes down, I gap. So now I have this island gap right here, and I just rip, right? And then I have this day, which is just the day where, you smash everybody's hopes and dreams, you run all the way up, and then you make it look like you're gonna come all the way down, and then the next day you just gap up, right? And you just rip. And that's exactly what's happening. So usually when you have these bars that encompass 5 or 6 other days, that's what happens. You flipping and you're going. Now, for this to be a complete pattern, a complete double bottom, you really are looking to get above there. I don't know that I'd be waiting for that. I might try to play this little bar, this little wonky hammer right there and see how we do. And you can see this pattern much clearer right here. You can see that undercut right here. And you can see that you can actually see the whole evening star pattern right here. So I would be paying attention to this. I would definitely be in that space. This was another one that was in this space that I thought was just fascinating. Smaller name, it was an IPO very recently, well, recently by a year ago, but you have some pretty key levels here that you can just kind of see how you were marked, right? And I don't even really need the moving averages because we're not even really trending yet, but you can see this, you can see the W, right, coming out. And so that W would take you to here, which would take you to 3690. So I think that that's a fair assessment on where you could see this push to relatively fast. Now, I've had a huge move here, okay, huge move on the week. So I'm not looking to build, but they made it so easy for me that it's silly not to try this. Now, let me just show you what I mean by how easy they made it. Here's your demarcation line, right? Long-legged doji can't do it. This bar can't do it. This bar does it. They gap us up, they fill us down. But this long-legged doji, the high of that is your stop. What you want to do is you want to see if you're going to flip this. So if you can flip this open in that red bar, it's game on for me. I think that's a very simple trade because that's a bar where you had people just literally dumping off the open and you work some of it off already. But now you got to see if you're going to work the rest off and maybe flip to that 3686 level. Now, I do want to go through something that we usually don't do. I want to give you 2 indicators to watch. So what I do want to point out is just on these indexes, okay? I don't view this as done. And I think that a lot of people need to kind of understand that. So I see an undercut and then I see us getting over this higher high. That's what I see, right? So then we got over this higher high here. And then we've come back down, we've retested. Now, do we have problems that we have to deal with? But we are above the 22. Here's your 55, okay? You have a little cross there. Here's your 200. Are we going to get through that or not? I don't know, but I think that you need a rest. And let me show you why I'm saying that. This is stocks above the 200-day moving average. Here's the symbol for it. This is TradingView. You can do this yourself for free. All this is telling me are stocks percentages above the 200-day moving average, which is right now 52. If you go out, you take a look at the past 10 years, you can see these levels very clearly. You can see you're basically in the middle, right? Okay, so let's take a look at something else that I think you should find very interesting. Now, this is something I went over with the trading community last Sunday. If you are interested in the trading community, there is a link up here to join the waitlist. It is closed for the rest of the year and it is waitlist invite only. So what you're seeing is this level. And I pointed at this level going back, and I was really just focused on this particular period of time. And let's go through exactly what this is. And it's really important to get this. This is S&P stocks above the 50-day. And if you go back and look at a chart, every single one of these is a high, okay, on the index, right? And it kind of makes sense if you think about it, right? Just like you have your lows, right? This was when we had that meltdown in 2018. This was the pandemic. And this is the nonsense that we've been dealing with this year. But once you're down so far, you can only go so far before there's some kind of bounce. Now, you've bounced all the way back up here. This means that you're going to have some kind of rest or pullback. It does not mean that you're going to go straight down, okay? You can easily pull back down and then come right back up. You don't even need to come down this far, right? You can see some of these drops are about, significantly less than that. So just keep that in mind. You can touch this and you can basically go to average. But it does mean that up here, shorter term trades where you're taking it pretty quickly on pushes, like the SEDG trade, those kinds of trades, you're looking for them to push and go. It does not mean we are overvalued. And let me explain why I'm saying that. If you go and take a look here again, okay, and you look at the 200, you can see we're on the average, right? Where during 2020 and 2021, look at the reading. Right? Almost every stock was above the 200-day moving average. I mean, that's extremely rare for something like that to happen. So yes, we are a little bit overbought, and yes, we might be due for some kind of settlement or pullback. But what this will do is when they drop, right? When they drop, some stocks are going to be above the 50, some stocks are going to be above the 200, and they're going to start being able to sort through your leaders. They're the ones that are going to hold their ground. Again, you could even go back and take a look, but these bottoms will be completely marked by those dates, just like these tops will be marked by those dates that we went over. It's very clear. Point that I'm getting at is it possible that we just go sideways? We could go sideways for a little bit or trade ups, and some names could sell off. We don't have to go straight up or straight down. There is a happy medium. And if you really take a look at where we've been since June 13th, I would argue that we've only undercut it for about a week and a half. And now we've got some support. Do me a favor and please comment on this video. Let me know if you liked what we went over today. It really helps me out a lot in knowing which way to go with content. Let me know if you liked when I showed you some of the indicators that I look at during the week, or you would just prefer more exact levels on ideas or more ideas. I think 10's enough, but as a group, we should decide. And also make sure you do subscribe, because I am putting videos here through the community tab that you can only see. And you would have seen SI today, you would have seen coin, and it would have been beneficial. So that's it, everybody. Have a great weekend. If you have any questions, as always, reach out. Trade to win.